I'm Matt Bouchard here in New York City for REIT Week 2019, NAREIT's Investor Forum. Joining me today is John Good, CEO of Jernigan Capital. John, thanks so much for joining us.
Oh, you're quite welcome. Glad to be here.
Now, what are some of the unique challenges that Jernigan Capital faces as a mortgage REIT?
Well, we are not a typical mortgage REIT. We are, for one, single sector focused, whereas most mortgage REITs are multi-sector focused. So our challenges tend to come from the sector in which we're invested. Secondly, we are making simultaneous equity investments in every project that we finance, unlike most mortgage REITs. So we end up with more operational type challenges. Monitoring operations are probably more important to us than they would be to a typical mortgage REIT. As long as a typical mortgage REIT is getting debt paid on time, they're fine. With us, we're looking at overall performance to create long-term value because we have a piece of both the equity and the debt.
Now, Jernigan Capital's IPO in 2015 took place right before a broad market downdraft impacted the entire MREIT sector. But your company's rallied since then. What steps did you take to aid in that rebound?
We tend to move with the self-storage sector itself, and the self-storage sector has actually had a nice run since 2015. When other mortgage REITs are negatively impacted by perceived movements in interest rate, because we have a significant equity investment in every project and we have rights of first refusal to acquire those projects down the road, we tend to be less impacted by something as simple as an upward movement in interest rates.
Now, finally, since Jernigan Capital is more of a financer providing fixed rate capital, do you see rising interest rates as posing a potential threat?
Not really for us, because our investment structure is really a unitranche investment structure. So we are invested, a piece of every investment is senior debt, a piece of every investment is like mezzanine debt, and then a significant piece of every investment is equity. So a movement in interest rate tends to be upward, tends to be hedged by the equity position, and a movement in interest rates downward tend to be hedged by the fact that we have a fairly strong fixed rate on each one of our investments.
Great. John, thank you so much for joining us.
Okay, thank you.
For more information on REIT Week 2019, be sure to visit NAREIT's website, REIT.com.